Morning, everyone. Looking at the US stock markets, the Dow has earlier on recovered from the 24,000 psychological level. Since then, we did see the Dow has breached above the 25,400 points. It has hit towards the 25,900 points level and subsequently staged a mild pullback. And on last Friday itself, we did saw the Dow has gained about 0.5%, forming the short-term breakout from the EMA 60. A pullback and a potential continuation pattern for the Dow Jones, firstly to retest the 26,000 psychological level. Should there be a breach above that, further upside will be seen towards the 26,500 points. In the meantime, the 25,500 will serve as the immediate support level for now. Similarly, on the S&P 500, the S&P 500 has further recovered from the EMA 120, which is around the 2700 psychological level. Since then, the S&P 500 continues to form the higher high and also the higher low formation. And last Friday, we did saw the S&P 500 has breached above the previous all-time high level, closing at the fresh all-time high at the 2874 on the S&P 500. Moving forward, we expect further upside for the S&P 500 towards its next resistance, which is located towards the 2900 psychological level. In the meantime, the 2800 will serve as the immediate support level for now. Should there be a follow-through by interest above the 2875, further upside will be seen towards the 28,900. But if the S&P 500 were to reverse its position from this point onwards, then we might see further consolidation on the S&P 500 back towards the 2800. Some updates on the crude prices. The crude prices has again formed the double bottom formation along the 64 US dollars barrel mark. Since then, we did saw the crude prices has staged a strong recovery. Recently, we did see the crude prices has formed the trend line breakout above the 66-67 US dollars barrel level, and the follow-through by interest was noted as the crude prices continues to trend higher, closing above the EMA 60 level as well. For now, we expect further recovery on the crude prices back towards the 70 to sell holds there. If the 70 level were to be breached, further upside will be seen towards the 73 or even towards the 75 US dollars per barrel mark. In the meantime, the 67 will serve as the immediate support level for now, followed by the 64 US dollars barrel level. Some updates on our local front. The FMKLCI has earlier recovered from the 1660 level. Since then, we did see the W-shaped formation breakout on the FMKLCI above the 1700. Subsequently, the FMKLCI continues to trend higher towards the 1800 psychological level. However, after hitting this 1800 psychological level, we did see some of the shooting star candle was being formed, and subsequently the FMKLCI has pulled back, staging a healthy breakout. A pullback just towards the EMA 20, and the continuation pattern was formed as the FMKLCI has once again crosses above the 1800. And on last Friday, despite some of the mild selling pressure or some of the mild profit-taking activities in selected index heavyweights, the FMKLCI continues to maintain its position above the 1800, implying that we might see further upside for the FMKLCI over the near term towards the 1830. That will be the immediate resistance for now. But if the 1800 level were to be given up, then we might see further retracement on the FMKLCI back towards the 1760 level. On the lower liners wise, is a different story. We did see the lower liners has again recovered from this 13,650 points level. Since then, it has hit the recent peak of around the 15,200 points. It did not cross above the 15,200 points, and instead it reversed its position from that point onwards. Following the recent weakness, we are seeing some of the weakness on the indicators as well, as the MACD indicator has already issued a sell signal. So on the FM small cap index, we might see some of the mild pullback of mild profit taking activities towards the 14,560 points level to see how it holds there. If that level were to be given up, then we might see further retracement on the lower liners. But if we can see some of the recovery from this point onward, like a bullish engulfing candle or a hammer candle, then we might see further recovery on the FM market index back towards the 15,200 points level. On stocks wise, some of the stocks that I watch out for firstly will be Dayang. Given that the crude prices has recently recovered, so we might see some recovery on the oil and gas companies as well. Dayang has again recovered from the 54.5 cents level. Since then, we see some of the resistance along the 73 cents. After breaching above the 73 cents level, we did see the breakout pullback and the continuation pattern was established on the Dayang as price has pulled back just towards the EMA 9 or the EMA 120 level and form a good recovery pattern on last Friday, forming a good bullish candle. For now, we will be monitoring for the breakout above the 78 cents level. Should there be a breach above that, further upside will be seen towards the 85 cents or even towards the 92 cents level. The stop loss point will be located towards the 72 cents. Should there be a breach above the 78 cents level. On indicators wise, everything appears to be quite positive right now. As you can see that the MACD indicator has already issued a buy signal, just that the RSI is slightly overbought right now. On Sunco, price has again recovered from the 48 cents level. Since then, we did see a good recovery pattern as price recovered towards just the 64 cents and traded in a sideways manner over the past 1 month trading period. For Sunco, what we do now is we're going to monitor for this short-term consolidation breakout above the 59 cents. Should there be a breakout above that, further upside will be seen towards the first target price at the 69 cents or even towards the 71.5 cents level. Your stop loss point will be located towards the 59 cents. Should there be a breakout above the 64 cents, we are expecting the MACD indicator to issue a buy signal, whereas RSI could be crossing above the 50 level should there be a breach above the 64 cents. On Hexa, price is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Hexa has again recovered from the recent low of around the 65 cents level. Since then, we are seeing some of the bullish divergence signal was being formed as the price has been trading lower, but the MACD indicator has been trading higher throughout this period of time. For now, we are seeing some of the higher volumes being traded on Hexa again over the past 1 month trading period. So for Hexa, we need to monitor for this consolidation breakout above the 72 cents level. Should there be a breach above these 72 cents, given that price has already formed the gap up formation and closing above the EMA 120 level on last Friday. For now, we need to monitor for the breakout above the 72 cents for us to target the 77 cents or even towards the 83 cents level. The stop loss point will be located towards the 67.5 cents and the final defense will be located towards the 65 cents level. Everything appears to be quite positive on the indicators wise. The MACD histogram has really turned green. The MACD line has really maintaining its position above the 50 level over the past 2 to 3 weeks trading period, whereas the RSI continues to maintain its position mostly above the 50 level as well. For Ewin, price has been on a very strong rally towards the recent high of around the 88.5 cents level. After hitting the 88.5 cents, we are seeing some of the healthy pullback on our Ewin as price pullback and traded in a sideways manner. However, we are seeing some of the dodgy candles being formed or some of the sideways accumulation candles was being formed on Ewin that we're going to monitor for the short-term consolidation breakout above this 82.5 cents level. Should there be a breakout above that, then we could expect further upside for even back towards the 88.5 cents or even towards the 95 cents level. Your stop loss point will be located towards the 77 cents on EWIN. Last two company for today will be firstly is Press Berhad. Press Berhad has seen a strong recovery trend from the low of around the 91 cents level. Since then, price has hit the recent peak of around the 1 ringgit and 34 cents. After hitting the 1 ringgit and 34 cents, we are seeing price has been has pulled back over the past 3 trading days, and on last Friday, price has again pulled back on intraday basis, but it covered most of its intraday losses, forming the hammer candle on top of the EMA 60 level. This could be the short-term breakout, the pullback, and the potential continuation pattern that we're going to monitor for this as the breakout above these 124 cents. Should there be a breach above the 124 cents over the short-term period, then this could be the flat formation breakout that we're expecting price to trend back towards the 134. or even towards the previous gap down formation at the 1 ringgit and 60 cents level. The stop loss point will be located towards the 1 ringgit and 15 cents on price per heart. Redmans is a new IPO. Price has again hit the recent high on the intraday of the 32 cents on the first day of trading. Subsequently, price has pulled back and traded on a sideways manner. Recently, we are seeing a strong breakout above the 25 cents level on Redmans, accompanied by some of the improvement in volumes. Subsequently, the follow-through buy interest was noted on Redmans as price continues to trend higher. Subsequently, price also has breached above the previous intraday high of 32 cents. After hitting the breaching above the 32 cents level, we are seeing a good breakout pullback and the continuation pattern was being established on Redmans, accompanied by some of the very high volumes being traded on last Friday. For now, any pullback will be a healthy pullback for us to accumulate potentially towards the 34 towards the 35 cents level for us to trade back towards the 37 cents or even towards a new high of around the 40 cents level. Your stop loss point should you accumulate around the 34.5 cents will be located towards the 32 cents level on Redmans. If you have any questions, you can put in the chat box and I'll reply you shortly. On Pekka, price has again formed the shooting star candle towards the EMA 120, which is around the 1 cents. After rejecting the EMA 120 level, price subsequently has pulled back. Price has also pulled back below the previous reasons along the 91 cents level. Following the violation below the 91 cents, you should cut loss from that point onwards. If you didn't manage to cut loss, then your next defense will be located towards the 82 cents. If price were to violate below the 82 cents, then you have to cut loss immediately. The company is also in a downtrend formation since the early part of the year. So any recovery from now will be just taken as a technical rebound with gains limited towards the 91 cents. If price were to recover from this point onwards, then there will be an opportunity for you to sell into strength. So any gains on Pekka would be an opportunity for you to trim your losses. For Sunrise, earlier we did mention on this company for the breakout above the 77.5 cents. Yes, hit of 86 cents, 89 cents, and also the 95 cents level. Earlier we thought price were to pull back before the recovery were to resume, but it did not pull back and continues to ascend higher. So for Sunrise, if you're holding on to this company, you can continue to hold on so long as price maintains its position above the 89.5 cents level. Should price recover from this point onwards, your target will be located towards the previous peak of the 98.5 cents or even towards the 1 ringgit and 5 cents level. So any pullback below the 89 cents will be then you have to lock in your recent gains. Given that price has been trading on a sideways manner accompanied by some of the low volumes, price is likely to just trade on a sideways over the short-term period. Parkson has again formed the double top formation along the 65 cents level following the recent recovery. After hitting the 65 cents, price has subsequently breached below the recent support along the 50. For the first support is located towards the 58 cents. Following the violation below the 58 cents, then you have to cut loss immediately as price continues to pull back on intraday basis below the 52 cents, 52.5 cents level. If you do not manage to cut loss at these two levels, any recovery from now, for example, a gap up for today or a recovery from today on intraday basis will be an opportunity for you to sell. A recovery towards the 52 cents will be an opportunity to sell. But if you still want to hold on to this company, the final defense will be located towards the 47.5 cents level. Everything appears to be quite negative on this company right now as price formed this bearish candle on Parkson. If you look at the weekly chart, it's certainly on the weaker side as well. If you have noticed, price has again violates below the 52.5 cents level. Should price see further weakness on on the weekly chart itself on this week, then the MACD histogram could be issuing a sell signal. Every time the MACD indicator on the weekly chart issue a sell signal, we could see further weakness on the on most of the charts. So should that be a sell signal on the weekly chart, then we could see some of the similar pattern to be formed for price to trend back towards the recent low of these 38 cents. If there's no further question for today, then we'll end the morning briefing. Thank you.